It's not in the face! Thank you.
Hello and welcome to Hey, Not the Face with your host, John Nash, and your producer, me, Steffi Haynes. And today we have a breaking news segment. We are giving you guys some information, an impromptu podcast, if you will, of some brand new One Championship finances. And boy, they look bad. But if you want access to all of the content in this, you need to go ahead and subscribe. Let your fingers do the walking, because some of this will be behind a paywall. Now, John, how the heck are you in the, 1 day since I spoke to you last?
Good. I'm staying busy. The MMA news keeps me busy, even though I try to do as cover it as minimum as possible. I try to do as little as possible, and yet they keep pulling me back in.
I would alert people to two things. John has an excellent article up over on Uncrowned, that's at Yahoo. Check that out, because if you recall, in our last episode, he broke down some of the reasons why MMA fights as a whole are declining. And so you can find it in much more detail in readable form over on Uncrowned. And the second thing is our episode that I just mentioned, which went up yesterday. You'll want to check that out, because you can listen to him talk about that there, as well as all of the fighters that were going to testify on behalf of the UFC, how many millions they'll be making off of the settlement that went against the UFC. So do check those two things out. Now, John, let's get into it. You got hold of some brand new finances from One Championship. What are they? How did we get hold of them?
Because One has been making announcements lately about how good their revenue is and all these plans they're making that are going to make them profitable, that's usually a cue when they start doing that some finances might be filed. Now, we thought finances would be unavailable in the future because they had moved their operations to the Caymans. But apparently, I think some investors didn't like that because it looked like they're hiding. And so they moved them back to Singapore for now, although they're in the process of transferring everything to Thailand. And so there was a suspicion that they might do a future filing in Singapore, even though they were way behind on when this was due. And lo and behold, there was a new filing. And I was tipped off to this, even though we'd been keeping an eye on the ACRA or the Singapore BizFile account. They give you an update from ACRA, which is basically Singapore's SEC. We've been trying to keep an eye on it, but I was tipped off on Twitter quickly by Jonathan of Kowloon, Globe SV. God, I know I screwed up his account. It's like
Globe SVS. It's like Globe Services. So yes. You can find him really easy.
At Globe SVCS.
Yeah.
He's a very good follow, especially about One. Especially if you want to follow someone that's very good at crapping on One, he's a very good account to follow. So
yes, he is.
And so we were tipped off, went to it. I got a hold of it. It's, from ACRA. And so this is what they filed. So people, often when we talk about One finances, people are like, oh, you're making up. How do you know? Well, this isn't me saying this is One. I'm taking it from official documents that have been filed with the Singapore government. Unless One is lying, this is, fairly accurate. Although we will get into why these finances might not be fully accurate.
Now, we're going to take this section by section, but John, I have a quick personal question for you. Do you ever get tired of people doubting you?
Maybe, I guess. It gets a little old, but I'm used to it at this point. I'm used to it. One thing I will say I am proud of is my track record. I am not always right. I do not know everything. I screw up a lot. I screw up fighters' names every episode. I screw up in the middle of a sentence from the first time I said the name to the second time, I'll screw it up. So I know I am not infallible, but I do note that I think my track record is pretty damn solid in this, on this coverage of One, on UFC finances, on the fighter pay, all that stuff. I think I've been fairly accurate. My batting average is much higher than I'm a Hall of Fame batting average. Let's put it that way.
I would agree. Very much so. And thank you, because I don't think enough people say that to you. So thank
I
you.
love accolades. I thank you. I love accolades. I love compliments. I love praise. I'm in need of as much praise as possible. So thank you. My ego really could use it. Thank you.
All right, so we're going to take this brick by brick, and you guys will get to see this because we will have these documents inside of our Substack post that you'll be, you open it up, you listen to the show, and you read along. Okay, these documents will be in there. Now, some of it, again, will be behind a paywall, so subscribe. All right, let's start at the top. We've got a director's statement and an opinion of the directors. Tell me about those.
Well, just to go, this is just a statement of this, the statement of fact that this is the audited, consolidated financial statement of one championship. The opinion of the director basically saying that this is accurate, that we believe this is accurate and up to date, on the best of our ability. So it's just basically they're promising that we are being truthful. They're stating we are being truthful in the statement.
Okay.
So yeah, and then if you keep going through, I'm probably gonna want to skip around because there's a lot in here that's repetitive from previous ones, and people they can listen to previous episodes, and we have on our Substack the previous articles that describe the earlier financial statements, so you can find those as well. But it goes through after that. If we go down, we have director's interest in shares, which talks about what each director owns and shares of the company. We get, there's another, this is kind of interesting though. If you get to page, this is right before they sign it, kind of the introduction on page 3, they talk about the share option scheme, and the shareholders have approved the share option plan for the granting of non-transferable options that are settled by physical delivery of the ordinary shares of the company to eligible senior executives, employees, and eligible participants, respectively. So that's their share option plan. On November 2023, the share option plan was canceled, and all existing share options were replaced by a share option plan with the immediate holding company, Group 1 Cayman Limited. So this is a move they've made. It looks like kind of a cost-cutting measure, so they don't have to have as many share options. Also, they're not doing share options in this company. They have the parent company, the Cayman Island one, that they're doing it now. So that's the one kind of the interesting part in that opening section. And as we get down, another interesting part is the report of the audit of the financial statement. The auditor gives their opinion on it, that basically it's accurate and the basis for opinion. And I'm going to note, too, that there's been changes in this report. So I think the auditors that they're using have basically demanded that they have to be much clearer in their language than previous ones. Now, that's just my opinion. But as we get further on, you will see that they are describing practices that one has that are much clearer now than the way they used to describe it. That was more opaque. And so I think that's worth noting. So let's just keep skipping ahead. I want to get to the important stuff here, the things people really care about, and then we'll start from there. All these signatures. If you would go to page 7, Stephanie.
All right, page 7. I am there.
Okay, now you look. What is this? This is the consolidated statement of comprehensive income for the financial year ending December 31st, 2023. I refuse to read it the way the rest of the world does do their dates. Now, look, what is the revenue for 2023?
Okay, I see it here. It says 67,998.
Now, remember at the very top, it says US dollars. So this US dollars 000. That means we have to add 1,000 or multiply by 1,000 by these numbers. So that means their revenue, according to them, was about 68 million, just a few thousand below that, but 68 million in 2023. That is an increase from 54.3 million the previous year. And if you go down this statement, you'll see that the cost of sales, the cost of putting on their product, which is like the production, stuff like that, transportation. In 2022, they actually spent more. They spent 41.3 million in 2022, but in 2023, they spent 32.3 million. So they've cut costs there. And as we go down, we see other income, which is other source of, first there's a line item, adds it all together. Other income, in 2023, they had 23 million other income. They only had 3 million last year. Marketing expenses went up from 47.8 million in 2022 to almost 59.6 million in 2023. Administrative and other expenses went from 41.5 million up to 35.3 million. And then impairment loss of financial assets, only 200,000 in 2023, but 23.6 million in 2023. So 200,000 in 2022, 23.6 million last year. So you add all these up, and basically, as you go down through, this is the P&L statement. They show the losses. You add it up. The important number is you get to the bottom and you see in 2022, they reported a loss of $61 million. A loss is, the total loss of their capital. And this year, or not this year, but the most recent financial statement, 90 million in losses. And so they've increased their losses. And if we continue down, I'm going to skip to another part. And I'll let you ask some questions, Stephanie. If you skip down to, I think it's page 11 on the PDF, the number, they have 11 at the bottom of the page, not the PDF page.
Sure.
You'll see that they have a statement of change in equity. And there you can see how much the capital they have, the opening balance on the beginning of the year. They have $536 million, right? And then you can see how much accumulated losses. That's how much they've spent. So $444 million. So they went into the year with basically just 90 million left over. And at the end of the year, their accumulated losses were 530 million. And then you see that they have capital reserves and some other, and total reserves, other assets. So their total equity at the end of 2023 that are left over after starting after having raised 536 million total over the lifetime of the company, they have $26 million left over.
Oh my God. Does that toll the death knell?
At this burn rate, it would. Now, we know it's not reported in here, but we know from other financial statements that we covered on this show that they have raised more money since then. Equity that their total capital that they have raised since then is probably around 584 million. So another additional $48 million they've raised. But at the burn rate they're going through, anywhere from 60 to 90 million, they are probably in the same situation now that they were on this report, that they are down to their last few million, that they are burning more that they will not last the year at this burn rate. And my guess is, and this is just a guess, is part of the reason this financial statement was released, because we've seen this in their history. This happened several times. Part of the reason they made these statements and part of the reason that this has been posted on with ACRA is because I'm guessing they possibly have more capital coming, that someone is going to give them more money. I don't know who, but I'm guessing they have more money on the way that'll keep them afloat for a little longer. But it does seem like every time they raise another round of funding, there's more strings attached to the funding, and it's a smaller amount every time. So I'm not sure, and unless they drastically cut their expenses, I am not sure how long they can keep going.
Question. Would some
Byron.
of the cost-cutting measures that we see in some of the numbers you rattled off, would that be why we're seeing all the layoffs?
I think that's a big part of it. They're really trying to cut costs, and we'll probably get into it when we get into some of their other expenses, especially in the revenue. But it does seem that even though they cut in all these costs, because they've sheltered some of their side projects. We will see what they did to some of their subsidiaries in a little bit later in this document. They canceled. They changed their option plan. They are moving events all to Singapore, not to Singapore, but to Thailand, and doing Muay Thai, where they don't have to pay the combatants as much as you do in MMA, where there's more competition. So they're doing a lot of cost-cutting measures, but it does not seem to be enough. And there's certain expenses, especially the marketing. And I have theories about why the marketing is so high, but you notice the marketing expenses are still extremely high.
Mm-hmm.
I mean, they're spending kind of like what the UFC did on marketing back in 2016. And the UFC was generating $609 million in revenue back then. In 2015, I should say, they generated $609 million in revenue and had that kind of marketing expense. And one is not generating anything close to that.
Why are they doing that?
Well, here's my theory. And I don't have true evidence of this, but I think we have some, we can make some assumptions based when we get into the revenue, is they're spending a lot of marketing on basically pushing metrics. They are spending on probably on a lot on high level analysis and advisors from like Goldman Sachs or whatever top financial institutes that go out and get money from capital raise for them. They're spending a ton. And this has long been the rumor, but I would guess it's probably true, is they are paying for people to drive up metrics, or at least in the past on Facebook and YouTube and other things, so they can claim, when they make these brag that they have the largest, media property imprint. That's what they're spending it on. It's not being spent on stuff like the fighters. It's not being spent on production. It's not being spent on actual advertising like commercials to get people to watch it. It's being the marketing costs are being spent, my guess would be, on pushing metrics, which inflates the metrics and makes them look good when they do a presentation, but doesn't seem to be actually drawing an audience.
So in your astute opinion, are they making a big mistake with that marketing budget?
Well, at first, it was probably a smart idea because you're trying to raise more money. And it depends on, I guess, what your final goal was. If their goal was just to make this company look great and then flip it to someone else, that would have been smart. Unfortunately, it doesn't look like they were able to flip it to anybody else. And so it's, as a company, it doesn't look like they have much much to save for all this money spent. Again, a good example, we can go to PBC, and everybody always talks about how PBC blew all this money. And PBC went through hundreds of millions of dollars Waddell and Reed gave them, right, and raised for them as an attempt to get boxing on network TV and get a massive broadcast deal. But PBC won. They knew it was a moonshot. They say in the documents from the lawsuits that it was a moonshot. We were taking a massive gamble because the payoff could be huge. But PBC also, what were they paying all that money for? One is they were paying for time buys to get audiences to prove that they could draw an audience on network TV or on the stations they were playing, and also to get the product in front of people. And they're also paying huge salaries to boxers that are expensive. Those type of expenses, and then when it doesn't work, when they failed to get this big network deal, they still had boxers under contract that could sell and make money, and so they could pivot, to a profitable industry of putting out events that make money, but nothing that was as big as they were hoping for why they invested in the first place. The difference here is they are not. It's not like they are now stacked with top-notch fighters that are major draws, right? What big name fighters does one championship have under contract that are massive draws? They have some. I'm not going to knock all their fighters, but they're not. There's no big pay-per-view sellers. No one that can sell massive gates, things like that. So that money hasn't gone into signing top fighters that are draws. It hasn't gone into actually, putting the product in front of people. They had deals with Amazon and stuff, but it wasn't like there was massive ad campaigns to get people to watch Amazon or put them on time buys anywhere. They haven't spent a lot of money putting events in America to get American audiences and get American press. So the money hasn't been spent to actually build the promotion and the fighters to sell. It's been built to give them, this is my argument only, this is just my view from as an outsider, I have to put that caveat, but the money has been spent to give them the appearance of being this massive property without actually being a massive property.
This sounds very, very much like another promotion we know of that sort of does this same thing, and that would be PFL, right?
Well, PFL does a little bit, but not nearly as much, because PFL, one thing they do is they do have, in the past, now lately they've been letting fighters go, but in the past they did spend money to get bigger name fighters. France and Ghana, they spent a lot of money. They acquired some of the Bellator fighters and have paid and used them. They are putting events on. They spend money to put events on in America, in Europe, in Middle East, North Africa, right? Trying to expand it. They're not moving everything to one location, which is much cheaper, like Thailand. They are trying to spread, trying to get TV deals, trying to get sponsorship that way. So they do exaggerate all the time. They do that nonsense where Don Davis says, now they're using the term that we are the duopoly with the UFC. We're the biggest sports market. They do exaggerate how much of what a footprint they have in the landscape. They do brag about the number of ranked fighters, but again, they can at least brag that they actually have top 25 MMA fighters where one doesn't have that metric. But PFL, they all those things, what they don't have is they're not boasting about going to Nielsen saying we have 4 billion imprints and fans out there in the world. These absurd numbers. They use that a little bit, but for the most part, PFL is trying to sell himself that we have a footprint of actual events spread around the world filled with top-notch fighters. Now, we might exaggerate how much of the top fighters they have, but at least they have some of them.
Okay, so what's the next section that we need to be looking at?
Well, let's go down like I said, we went over the marketing expenditures. I think the next thing we want to do is we go down here. Sorry, I got to catch on page. We talked about how much money they have left in their burn rate, and that they'll probably have more coming. I would go down. There's a section on, let's go down to revenue, which we got to go quite a ways down section. It's going to be on page, I believe. Okay, if you go down to page 27, that is the text description of the revenue. Then you can also jump ahead to page 33. So this whole revenue section, if you go to page 33, we actually have a column, a table showing the revenue per year. That's probably easier for people to follow. So I would go to page 33, the number at the bottom of the document, and you look at it. Okay, here's the revenue. Now I'm going to give you a couple numbers and tell me what you think. In 2022, they had $775,000 worth of ticket revenue. In 2023, they had $144,000 in ticket revenue. Now, I think they did 48 events in 2023. I'm not sure, but they did a lot of events, but only $144,000 in ticket revenue. Does not sound like a lot to me. In sponsorship, they went from 11.3 million in 2022 down to 8.3 in 2023. Broadcast revenue, though, jumped up from 37.3 million to 56.2 million in 2023. And then digital platform revenue went from 4.2 million to 2.7 million. And merchandise revenue went from $690,000 to $583,000.
So they only made a jump in one area, and that's broadcast revenue.
That's broadcast. Everything else went down. And I'm looking at that, and I don't want to cast aspersions. I don't want to be snide. But those are not the numbers of a massively popular promotion, if you ask me. $144,000 in tickets. That is, a PFL event, one single normal PFL event can do that in the United States, right? That is a microscopic. That is like a section for a UFC event, not a whole UFC event. That is a section of a UFC event.
To access the bonus content of this episode, you must be a paid subscriber. To do that, go to heynottheface.substack.com and subscribe today.
Ow! Ow! Not the face! Ooh! Okay, the face!